Hello, everybody. Thank you so much for joining us on this Sunday evening in India. And Gary right now is sitting in the US, and it's really early and bright morning for him. Thank you so much for all of you all, to come and join us and be part of this webinar. This webinar is going to, give you a lot of insights into the business analytics, from a financial decision point of view. Firstly, I would like to introduce our esteemed guest. He has, I just don't have enough words to kind of introduce him. He's got so much experience and he's worked in so many different places and so many different areas. There's specifically, to pinpoint one particular area within the finance domain is going to be very difficult for me, but I'm going to try. Gary has many years of experience. Gary Cokins was, he worked as a finance controller, he works as operations manager, and as a management consultant. He's worked with different companies, including Deloitte, KPMG, and EDS. He also worked for more than 16 years with SAS, and he was a prominent business analytics and intelligence software vendor there. He's become an internationally recognized expert speaker. He's an author, a consultant, and all these introductions of Gary in different hats that he's wearing, and he's bringing all this expertise to with us. So some of the specialities and the areas that he's been working with are on designing, integrating, and implementing analytics-based enterprise performance management systems and activity-based costing management, strategy mapping, balance scorecard, budgeting, customer economic value, risk management, and supply chain management. So please welcome Gary, and he's going to be taking the first session, which is going to last for about 70-75 minutes. And after that, Varun would be taking a 20-25 minute webinar, and he's going to be introducing the IIM Lucknow Finance Analytics Program. Varun, as most of you know, Varun Jain, he's the lead instructor for Miles Education. He has founded this company. He's a CPA and a CMA himself. He's joined. He was first working with. He also has an experience with Deloitte in the past. And after Deloitte, he's worked with Morgan Stanley and in investment banking, and leaving all those wonderful opportunities, he has founded his own company to help grow the ecosystem within our country for CPA and CMA. Miles Education being the leader in CPA in India, and we're bringing this program, in connection with IIM Lucknow and Wiley next. So there has been, so we are one of the partners for IIM Lucknow and Wiley programs, and we've launched a series of programs with them. And one such program is the IIM Lucknow Finance Analytics Program, and I will let Varun take you through those, through a little bit of detail on that. And we will leave the final question and answer round in the last 30 minutes of this presentation. Over to you, Gary. Looking forward to hearing from you.
Thank you, Ro, and Varun and Chandan. It's a privilege to present for you. I finally remember my many trips. I think I've done 4 trips to India, and the most recent one, Varun, you had me go to Chennai, Bangalore, Hyderabad, Mumbai, probably leaving one out, Delhi. Enjoy the food, and it's just really a privilege to present. I want to manage everyone's expectations. I'm going to go for 70 minutes and then we'll move on to Varun. So I hope you're in a comfortable chair. Just a little bit more about my background that Ro described. My undergraduate degree was in industrial engineering and operations research from Cornell in 1971. I got my MBA at Northwestern University's Kellogg School of Management. If you're doing the math, I am 71 years old, but I feel like I'm 41. I'm still a young guy, I think. Yes, my career was I consider it to be kind of 3/3. My first decade was in industry, FMC Corporation, a large international conglomerate, and then the 15 years with Deloitte, KPMG, and EDS. And yes, Ro, I was 16 years with SAS. Many of you may not recognize SAS. But it's the world's largest privately owned software vendor, 15,000 employees in analytics. And I retired from them 5 years ago. Now I'm just sort of having fun educating and so forth. The reason the books are there, there's a story behind that. I think careers have much more to do with luck and circumstances than being smart and competent. I had two lucky breaks. One of my breaks was early in my career when I was, I think, 27 years old. I was a division financial controller for FMC, but I had the opportunity to become operations manager in the operations. And I use the phrase, I then had to eat the accounting data I had been serving as the accountant upstairs. I found much of that information to be at best useless and at worst dysfunctional and misleading. And that was a real wake-up call to me about the difference between external financial accounting for regulatory and statutory reporting and internal management accounting used to serve line managers and employee teams and executives to make better decisions. But my other big break was in 1988. KPMG struck an exclusive contract with Harvard Business School professor Robert S. Kaplan, and many of you will recognize his name from the Strategy Map and Balanced Scorecard. I'll talk about that a little later, but he did the early pioneering work in activity-based costing. So I got recruited from Deloitte and I love Deloitte, to be trained by Kaplan. And for 5 years, I did nothing but implement ABC. And then I wrote a book, and that led to more books. And the rest is sort of history. I wind up being kind of a book writer. So let's get going. Who will benefit from this presentation? Managers who have previously struggled at promoting financial planning and analysis, enterprise performance management, and integrating business analytics into their decision support systems. Managers who intend to champion any or all EPM and business analytic improvement techniques, and they need a compelling call to action. And the reason I have champion in quotation marks is because it's been my observation that although it is nice to have senior executives sponsor new initiatives and ideas, often they are preoccupied with firefighting and short-term priorities. And it's typically managers 1, 2, 3 levels down in the organization chart who kind of have passion or fire in the belly and ask themselves, how long do we want our organization to continue to perpetuate stale and old methods? And they're the ones that will do a pilot or a proof of concept or a rapid prototyping exercise, which I'll describe later, to demonstrate to their line managers and their executives above them, this is the way to go. So I actually like presenting to people below the executive level. I will be talking about analytics, and I'm not promoting my book to push it to get royalties. In fact, do not buy this book. But what you can do is go to Amazon.com, and chapter 1 is a free download. So download that chapter 1, and it'll give you a good idea of what we're talking about in this presentation. So my agenda, I'm first going to talk about the stages of maturity of analytics. Why is it even needed? Then define it. What is business analytics and what's it all about? I'm then going to basically give you some general examples of analytics throughout industry. And then I'm going to talk about 4 examples for the finance and CFO function, but I want to warn you these stages. I'm going to then talk about something that's going to be a little uncomfortable for all of us, the digital revolution, artificial intelligence, robotic process automation, and the impact it's going to have on the accounting profession. And then I'll end with the benefits and summary. So let's get going. In terms of analytics, this is a nice spectrum from historical view to the future view. You do start with descriptive, typically pie charts, histograms, and the like. The next stage up is diagnostics. Notice there's a little outlier there. You could detect something that's not part of the pattern. Then we go to the future view, the predictive analytics. You notice my book was co-authored, Predictive Business Analytics, but at that point in time, I didn't know there was a higher one. I call it Mount Everest, prescriptive, which is really where predictive will give you all of the possibilities and options and scenarios. Prescriptive is what's the best one. This is going to be a bit funny, but I want you to think about this. There has been a study about divorce rates, and what they've determined is that the more money that the parents spend on a wedding, the faster is the divorce, the time duration. Look at that line. So when people spend very little money, they married for a long time. What can you conclude from this? Some people joke and say, well, just elope, don't even have a wedding. Others basically hypothesize that, well, if it's very expensive, that means the families may have debates amongst each other and create stress. But the point is, correlation is not causality. So you've got to be careful. So let's talk about, why is business analytics even needed? How does an organization gain a competitive edge? A couple of the options: by being first to market, like Apple; by customer loyalty. In the United States, Tiffany Jewelry is an example; by being the low cost, low price provider. I'm going to use USA examples, but Walmart, low cost provider, or maybe some other. My question is, whatever these strategies that are selected, how sustainable are they in the long term? And I want to basically reference Professor Michael Porter from Harvard Business School. He's sort of the expert on competitive advantage. And there are really three general strategies he's always described: cost leadership, differentiation, and focus. And he basically alleges, isn't competition ultimately about these three? So let's talk about them. Cost leadership strategy. It's accomplished via improving process efficiencies, unique access to low-cost inputs, vertical integration, avoiding certain types of cost. The differentiation strategy, it's accomplished by developing products and or services with unique traits valued by customers. Focus strategy, it's accomplished via concentrating on a narrow segment with an entrenched customer loyalty. But don't each of these have risks today? My answer is they do. Why? The cost leadership strategy, other companies can basically lower their costs much more quickly than in the past. The things like Agile and Lean are examples how they will reduce their costs quickly. Differentiation strategy, competition by competitors, changes in customer tastes. Remember when Apple came out with the iPhone? Wow, that was a real revolution. But within a few months, Samsung and other manufacturers also had their offerings. Focus strategy, broad market cost leaders or micro segmenters invade and erode your customers' loyalty. Think of Amazon. They began by basically just publishing books. Then they became almost a catalog selling other things. Now they're invading television networks and the like. So here's the point. The best defense is agility with quicker and smarter decision-making using statistics, analytics, and operations research, which is what we'll be talking about today. In effect, I'm sort of saying it's really difficult to adopt a generic strategy. You've really got to be analytical. So what is business analytics and why do we use it? Here's a quote from an academic paper from Steen Nielsen. He's in Denmark, Aarhus University, a really good friend. I just want to read something from one of his paper that I have down at the bottom. The paper shows that in order to be able to fulfill future job descriptions, accountants must not only have specific quantitative skills, but also creativity and imagination. The movement towards the increased use of analytics, for example, business analytics and the use of data, in business and organizations, therefore represents an interesting new venue from which management accounting and management control can benefit. Analytics means the discovery, communication, and visualization of meaningful patterns in data conducted simultaneously by the application of statistics, computer programming, and operations research. Analytics also includes the word dynamic to keep pace with the changes in order to provide relevant performance information. He's referring to the need for almost near real-time, if not real-time information, because things are just so volatile. So there is a confusion and lack of consensus about what is business analytics. Is it a data warehouse? Is it data mining with drill down and reporting, like the ability to go to a line item of a purchase order or an invoice? Is it business intelligence with enhancements? And in a few minutes, I'm going to describe the difference between business analytics and business intelligence. Is it data governance, data management, data quality? That's actually sort of the responsibility of the IT department, in their glass house. Is it probability and statistics like regression, correlation analysis, forecasting, optimization? And I know some of the older people listening to me, you took those courses at the university and you just wanted a passing grade and get out of there. Well, sorry, it's back. But the good news is you do not need to go get your old textbooks and brush up on how to do regression and correlation, but you will need skill sets in your organization that has these. Or is it all of the above and even more? The way that I like to think of business analytics is it allows more knowing and controlling. So if you look at this grid, the vertical axis is the ability to know stuff, the bottom unknown, top known, and then the horizontal is the ability to control. So when we basically move into analytics, we really increase the upper right part of the square. We get to know a lot more and we basically control it. The convergence of data and technology is creating career opportunities in data science that can be leveraged by accountants to increase their efficiency and improve their effectiveness. So some definitions. There is a famous book, and this is actually the second book by Tom Davenport and Jeannie Harris. Tom Davenport's a professor at Babson College, but the first book was Competing on Analytics. But I like their definition here. It's the extensive use of data, statistical and quantitative analysis, explanatory and predictive models, and fact-based management. And its purpose is to drive decisions and actions. And here's a longer definition, and I'm going to actually skip it in the interest of time, but I believe that Miles Education will provide a PDF of the presentation for you. And you can then read these at your leisure. So regardless how you define analytics, I always say work backwards with the end in mind. Know what is the problem or opportunity you're trying to address. And regardless how we define it, there's no argument about what is the purpose. It's better decisions and better actions. Analytics' goal should be to gain insights and foresight, that's the future view, and to solve problems, to make better and quicker decisions with more accurate and fact-based data, and to take actions. It is the use of internal and external data to provide a competitive advantage to an organization. So I sort of lied to you. I said I wouldn't give you a definition. That's not a bad definition. Business intelligence versus business analytics. Recognize there is no intelligence in business intelligence. I'm being a little humorous there, but that's because business intelligence, which has been around for over 10 years, is increasingly being marginalized as just reporting. Business intelligence is about query, drill downs, and reporting. But in contrast, what business analytics is about investigation and discovery. And a way to think about these is business intelligence consumes stored information. But what analytics does is it produces new information from the stored information, as well as some of the BI output. And then what corporate performance management, which are many methods, does is it deploys the analytics in the context of the method. And I will be giving you 4 examples later in my seminar. Insights and actions. Queries answer questions. Business intelligence creates questions, but analytics then stimulates more complex and more interesting questions. And most importantly, business analytics also has the power to answer the questions. And I'm going to get a little serious here, although some of you may think, oh, he is pretty serious. No, I'm a pretty humorous guy. I believe in the past, the best leaders and the best executives had the best answers. Today, I do not think that is the case. Today, I think the best leaders and best executives have the best questions. There is too much volatility. There's too much uncertainty. There's too much complexity for those executives at the top to rely on their intuition or gut feel to basically, or the types of answers they had earlier in their career that got them promoted to the top. They need to create a culture for analytics, discovery, and investigation, and tolerance for making mistakes as long as you learn from the mistakes. So that's my sort of message about what I think about the type of leaders that are needed today. Okay, let's do a little bit of a primer on analytics. Remember, there's 2 categories, historical and then predictive. Let's start with the historical, descriptive diagnostic. Tools there, distribution curves, bell-shaped, mean, median, standard deviations. Correlation, that's where you look at dependency relationships among variables. We would have tried to use that in that, the wedding, divorce, example I gave earlier. Segmentation, dividing groups into subgroups. The marketing department's quite strong with this. Cluster analysis, grouping objects that are more similar than other objects. For the predictive view, we've got hypothesis testing, yes, no. Often PhD candidates in universities, when they write their thesis, that's what they'll do. They'll offer a hypothesis and then test it or not. And then regression, forecasting dependent variables from independent ones. So that's just a quick primer on the types of tools. But let's give some examples. Which X is most likely to Y? Retail merchandising. Which product in a retail store chain can generate the most profit without carrying excess inventory, but also not having period of stockouts? Customer profitability. Which customer will generate the most profit lift from our least effort? Think of that kind of like a cousin to return on investment, return on customer. Employee retention. Which of our employees will be the next most likely to resign and take a job with another company? Before I left SAS, they had a tool. I'm not sure, SAS has over 200 analytical tools. I'm not sure how successful it was, but what it did is it would look at the last 5 years of all employees who have voluntarily or involuntarily left the company. And they'll look at things, what was their age, what school did they go to, how many departments did they work in, how long have they been with the company, and so forth. Then with all of that information, they'll put it on the existing customer or employee list, hit calculate, and in rank order at the very top, it will say, here is the next next employee most likely to leave and why. So it's amazing what you can do with analytics. These are the types of questions asked every day. Business analytics fills in the X and the Y. But analytics is much more than data mining. Statistics and analytics is more confirmatory than exploratory. It's not like finding diamonds in a coal mine or the needle in the haystack. Experienced analysts suspect and hypothesize that two or more things are related or that some underlying behavior is driving the behavior seen in the data. They prefer to fail fast, look, see if their hypothesis is right. If it's wrong or right, move on, keep asking. Statisticians and analysts then search for confirmation and understanding of the relationships. But there is a problem. What users really want, this includes you who are listening to me, is easy and flexible access to the data and the ability to manipulate it. But sadly, and I'm going to bring up kind of a sore point, often the IT department does not facilitate this. They don't allow the users to have flexible, if you will, business intelligence and analytics tools to basically access that data and do the manipulation. IT can sometimes be part of the problem. I love this cartoon, the need for predictive analytics. You have these three men or women in the boat about to go over the waterfall. But the man with his back is looking at his computer and he says, my real-time analysis says it's smooth sailing ahead. Well, it's not. So let's contrast business intelligence with business analytics. I'll use sort of a Darwinian evolution. Business intelligence starts with standard reports, ad hoc reports, the query and drill down, or OLAP, OLAP, acronym for online analytical processing, or alerts. But what business in analytics does is it takes it to a higher level, starting at number 5. That's where that regression, correlation, segmentation is all about. Then we move to forecasting and predictive modeling. And then again, Mount Everest, the ultimate optimization, prescriptive analytics. Now, some of you may be asking, hey, what was the difference between forecasting and predictive models in that previous slide? Well, I'll answer it. Forecasts tell you how many ice cream cones will be sold in July, so you can set expectations for planned costs, profits, supply chain impacts, and other considerations. But predictive models tell you the characteristics of ideal ice cream customers, the flavors they will choose, and the coupon offers that will entice them. So if your goal is to do a better job of buying raw materials, ice cream, and to have them at the factory at the right time, right place, right quantity, your company needs a forecasting solution. That is classical production and inventory control. And I am not a CMA or a CPA, but I am a CPIM, Certified in Production and Inventory Management. That's what the organization, the American Production and Inventory Control Society, although they've recently rebranded them names to the Association of Supply Chain Management. But if the marketing department is trying to figure out where and which most attractive customers to market the ice cream, it needs a predictive modeling tool. So I want to give an example that actually applied to me and my wife, Pam, on determining the value of a home, okay? So if you're going to basically want to know, hey, I'm out to buy a new home or my first home, how is the price that the person who's selling it, is it appropriate? Is it too high? So what you do is you look at the history of a lot of homes, their selling price, total square footage, number of bedrooms and bathrooms, size of basement, garage, type of construction, lot size, you get the idea. When I mentioned I actually applied this to myself, here's the example. I was raised in Chicago. Those of you familiar with Chicago, you're the younger people, you know, Michael Jordan, basketball, Chicago Bulls. The older people, you know, Al Capone, way back in the 30s, you know, gangster. We were relocated from Chicago to Raleigh, North Carolina. That's where the headquarters of SAS is. And my wife said, I want to live on a golf course. There's a lot of golf courses in North Carolina. I want the backyard of our house to not basically be another home, but be a golf course. So what I did is I looked at about, I can't remember, 100 homes that had been sold. Half of them were on golf courses, half of them, the backyard, half of them were not. And make a long story short, and then I looked at the house that we were going to buy, and which we did. I'm living in it right now. And I did a comparison for similar square footage, number of bedrooms, and so forth. And what I found is there was an $80,000 US incremental difference between a similar home with the golf course in the back and the golf course not in the back. And then when I looked at the price of the home that was being offered, it fit. So I actually used that type of analytics personally. Other examples, determining the credit worthiness of a borrower in banks. What a bank will do when an individual is seeking a loan is they'll look at your income, your payment history, how much debt you're currently carrying, what your work history, and all sorts of other information. And then using their model, see the new loan applicant, they'll put that input data in and they will come up with a score. But then over time, let's say that they actually accept a loan for someone and then they default. Well, they must have missed something in the algorithm. So what they do is they refine the algorithm. So there's what we call the PDCA cycle, plan, do, check, act. So the algorithm is constantly being improved as you see deviations from what you would have expected from prior, if you will, analysis. So what pressures have caused interest in business analytics? Well, one is strictly complexity and variables are replacing, gut feel and intuition. Also, just the exponential growth in data, users, search engines, and the like. Volatility, uncertainty, risk, clock speed. Clock speed's sort of my nickname for things are just happening much faster. Back to Steen Nielsen, Professor Nielsen, he talked about dynamic. You need almost near real-time, if not real-time information. Standardized processes. For example, enterprise resource planning, customer relationship management systems. Today, when every competitor in an industry has purchased an ERP system, and I'm very familiar with what is the prominent ERP vendor in India, I'm not going to name their name, you all know probably who I'm referring to. Well, that means every competitor's got the same tool. So to get a competitive advantage, you've got to basically go a stage ahead, above, and that's where analytics fits in. And then the intuition of the potential value of unused structured and text data. All analytics is not always, bits and bytes and numbers and zeros and ones and numerical Much of it can be text related. It can actually read, text and actually report with text. And then there's voice recognition, which is becoming increasingly a popular technology. And then just the enormous IT processing power. Those of you who are too young to remember when the United States put the first men on the moon, on their space capsule, I believe they had less computing power that's went on a mobile phone. So there's just so much more power today in computing. So let's have some examples of business analytics generally. And I'm going to read another quote from Steen Nielsen. In the future, business analytics will pervade most traditional accounting topics and decisions such as product mix, make versus buy decisions, profitability analysis, assignment of costs, and pricing at the operational level as well as at the strategic level by a large number of data and techniques. Topics such as dynamic and stochastic performance, optimization, value creation, fact-based decisions, and reporting through visualization are concepts and tools that the accountant has to be acquainted with in order to be able to live up to a company's expectations and to add value to the company. To work within these areas, the accountant must also possess specific soft skills, such as the creativity and imagination required for building data-driven models, for example, simple performance measurement models, activity-based costing, target costing, and the balanced scorecard. And I'll be talking about a few of those later in my presentation. So here's kind of a funny example. There is a celebrity, and I know about Bollywood, and I've enjoyed watching some of the Bollywood movies and all the dancing and music. But there's a celebrity who, at the beginning of their career, this is a movie celebrity, with their publicity agent, looked at the top 10 grossing films in terms of sales revenue in history. And what they discovered, all top 10 films had an alien. All top 10 films had special effects. All top 10 films had special effects, an alien, and a romance line. Who is the celebrity? Will Smith. If you're familiar with some of his movies, Independence Day, Men in Black, I, Robot, I Am Legend, Hancock, which was actually criticized by the movie critics, but it was successful in the box office making revenues. So it's an example of a celebrity who basically used analytics to further their career at the very beginning. But there's analytics in so many other areas: sports teams, crime prevention, music score. Just to mention about sports teams, I'm very active in many professional societies. And one of them is called Informs. You may want to write this down, IN as in Nancy, FORMS.org. It stands for the Institute of Management Science and Operations Research. It's the premier professional society for operations research people. And I'm on their sports analytics subcommittee, and it is fun. People love sports, and the analytics are being used so powerfully, not just for United States baseball, but soccer, I'm sure even cricket. But then music score, so many examples. But what about business analytics in mainstream business and government? Well, here is a long list. I'm just going to read a few, won't go through all of it, but let's start at the top. Retail sales and merchandising analytics, markdown and assortment planning. That's used for the slow-moving items in a department store that they move typically to the basement and lower the price. But what's the ideal? Financial services, risk and loan credit scoring. I gave you the example. Pharmaceutical analytics, drug development and clinical trials, which is so relevant today with the pandemic COVID. Marketing analytics, segmentation, churn analysis. Let me move further down. Telecommunications, customer behavior, supply chain and transportation, route optimization. What's the best route for a truck to basically drop things off at different stores, okay? Human resources, workforce planning. You get the idea. analytics can be used in so many other places, and that's just business. You know, where it's really phenomenal is in science, things like astronomy. You know, the way they can put satellites and land them on an asteroid, or the Hubble Space Telescope can look at the Big Bang evolution of suns, medicine, not just of COVID vaccines, but DNA. And it's just amazing what analytics can do. This is meant to be humorous. Look at this for 5 seconds. I hope you're laughing. It's a pie chart, you know, pie I've eaten, pie I have not eaten. But I'll tell you, visualization is important. More seriously, things like histograms and pie charts that are practical, because people can't just look at racked and stacked columns and rows data. When you do visualization, they get a much quicker view of it. My mother always said to me, looks are not everything. Well, she lied. I'm joking a little bit. You know, how you can quickly interpret information when it's visualized is much better than columns and rows and racked and stacked numbers. You can't see the magnitudes. So let's talk about some of the examples of analytics in the finance and accounting function. But, oh boy, I gotta do a little test here. Am I supposed to be ending in 5 minutes? Have I gone that long? Anyway, go real quick. The CFO function tends to be really well behind the, oh, no, I see, we can go till 9.
We have time, Gary. We have time. We are only 40 minutes into the session, so you have.
Oh, that's right. I started at 8:30. I got time. Okay, yeah. Let me write that down. 9.
Yeah.
Sorry about that. You know, this half-hour difference between your time and my time. Oh, okay. Wow. Okay. The accounting function is really 5 to 10 years behind other line functions like marketing or supply chain in using analytics. But I still want to basically give you some examples. And this example is actually coming from an article I wrote for the Institute of Management Accountants, Strategic Finance magazine. And there's actually the link to her. I am a member of the IMA for almost 30 years. And when I retired several years ago from SAS, Jeff Thompson, the CEO, called me and said, Gary, we're not going to let you sit in a rocking chair down there in Raleigh, North Carolina. You know, we want to create a role for you. And he created the Executive-in-Residence. I served for 3 years in that role till a couple of years ago. And I said, what's my job? And he said, I don't know, you write the job description. And I said, okay, well, I will for Varun Jain and Miles Education. And so this is about, the examples I'm going to give you are out of this particular article. So example number 1, for KPI validation. But I'm going to need to take a few minutes as a sort of a primer to prepare you as to where the analytics fits in. So what you may have already heard about the balanced scored and strategy map. Of course, above that is something arguably more important. It's the vision and mission statement. That must come from the executives. That's their job. Their job is to answer the question, where do we want to go? They need to set direction. But what the strategy maps and the scorecards answer is a different question. How will we get there? What are the projects, the initiatives, or the core processes we need to get better at? Real quickly, this is just a fictitious example of what a strategy map looks like. What Kaplan and Norton, they were the kind of designers of it, realized is the executives were overreacting to financial results reported at the end of the period. They said, you need to shift your attention to non-financial measurements and metrics collected during the period to respond to them. And they created these 4 perspectives that have cause and effect relationships from bottom to top. And in those boxes are little strategic objectives that are related. What the purpose is to align the behavior of employee teams and managers with the executive strategy. Most executives' big frustration is not formulating a good strategy, it's failure to execute the strategy successfully. And the way you align people's behaviors through measurements. You know, you get what you measure. If you can't measure it, you can't manage it. If you can't manage it, you can't improve it. So those arrows that you see, those are the KPIs, key performance indicators. And so you select them and then you put targets on them. So to sort of summarize a strategy map, a learning environment will stimulate process excellence. That will contribute to customer satisfaction and loyalty, and that will lead to the financial results. That's sort of the sequence from bottom to top, okay? Now, there are tools that you can use to validate how well did we select the KPIs. Sometimes people are just sort of guessing, or they're doing, the difference between a key indicator and operational indicator. Some companies will have 300 measures, but only a vital few can be key. The definition of a KPI is monitoring the progress towards accomplishing the strategic objectives that are in the map. But if they're just sort of guessing at the KPIs, how do we know whether they're the best one? So what I'm showing you here is just a screenshot, and many of the software vendors have something like this. But if we now bring in a tool like correlation analysis specifically, that's what this is, and we want to apply it to, let's say that we looked at the last 24 months, 2 years of KPIs, and then we monitor or we calculate using correlation, how well did the KPI actually contribute to the results? And I have a problem with my PowerPoint. You should have been seeing thick arrows and thin arrows. So if you can just imagine, see these yellow arrows, that some are very wide, some are very narrow. What that is really doing with the correlation is it's the thickness of the arrow reflects the correlation, the magnitude of the explanatory power that a KPI has on another KPI bottom to top. So if the arrow is very thin, it means there is not much correlation. We need to select a better KPI, okay? And incidentally, you can have negative correlation, believe it or not. That means if one department is doing too good, they're adversely affecting another department elsewhere. Sometimes sales people want lots of inventory, but manufacturing want throughput. So that's an example. Here's a second example. Profitability, customer profitability. The shift from being product-centric to customer-centric. The only value a company will ever create is the value that comes from its customers, the current ones and the new customers acquired in the future. To remain competitive, one must determine how to keep customers longer, grow them into bigger customers, make them more profitable, and serve them more efficiently, and acquire relatively more profitable customers like your existing ones. But we have some problems here. One, the accountants, you typically are not doing a good job assigning and tracing indirect and overhead expenses, which are very large, to the product cost or service line. So that's where activity-based costing comes in. But to complicate matters, they don't calculate below the product gross profit margin line to include distribution, selling expenses, marketing expenses, customer service expenses to get a profit and loss statement for each customer. And so what was really marketing and sales needs to answer questions, which type of customer is most attractive to retain, to grow, to win back and acquire, which types are not, and how much should we optimally spend, retaining, growing, winning back and the like. The real point here is that customers are the source of value creation for shareholders and owners. So part of the solution is to use activity-based costing. Yes, this is a complex diagram. It comes from a bigger presentation. But if you go to the IMA website and search on my name, there will be a statement of management accounting, SMA, titled Implementing Activity-Based Costing. It's 30 pages. You can read it. Or if you go to my website, see at the bottom left, GaryCokins.com, in the tabs, free downloads. But here's basically the primer and ABC. It takes the resource expenses. It doesn't allocate them like spreading butter across bread. It decomposes the indirect expenses, and then it traces them at the bottom where they pile up into the product, service lines, customers, and then something called business sustaining. Business sustaining are expenses that have nothing to do with interacting with customers or making products, typically 10 to 15%. of an organization's expenses. You still need to recover them with pricing to be profitable. The point here is costing is modeling. It's not T accounts and journal entries. You're modeling the inputs into the outputs. So if a company in US spent $10 million in January, it'll be the same $10 million of work activities, and it will pile up in the same 10 million. But with activity-based costing, going all the way, you can get a profit and loss statement for each customer. And you can see the margins layered like an onion skin. So in this fictitious example of this XYZ corporation customer, you'll notice there was a 30% composite gross profit margin of all of the tool products or services they were buying. But between the 30 and the 8 at the bottom, 22 more points of profit margin are eroded and lost, have nothing to do with making the product or delivering the service, all with those distribution, marketing, and selling expenses. And if you calculate this for each customer, you can put them onto a grid that looks like this. The vertical axis is the product gross profit margin, and the horizontal axis is kind of these high maintenance, low maintenance customers, because every company has a kind of, we call them devil angels, you know, high maintenance customers, always changing schedule, never by standard, always call help desk, always returning goods. They're to the far right on the horizontal axis. Low maintenance, you love them, you know, never only by standard, never shift schedule, never return goods, never call help desk. So here's the point. If you calculate using ABC, it becomes obvious the most unprofitable customers are in the bottom right because they're buying low margin mix from you and they're high maintenance to serve. The best ones are in the upper left because they're buying high margin mix from you and they're easy to serve. And now the name of the game is move the dots. But comes the challenge. What actions do you take to move the dots? Well, there's an advanced technique that can help basically marketing and sales that the CFO can help with. It's not being used by very many companies, but here's how to do it. After you've calculated customer profitability, you can then rank order all of the customers from the most profitable to the least and put them into a decile diagram. What this diagram, it's a kind of a vertical histogram. The one to the left is the most 10% of the most profitable customers and how much. The next one, the next 10%, and so forth. Now you'll see to the far right, there is actually unprofitable customers causing you a lot of work. But now the question becomes, what differentiates a high profitable customer from a low profitable customer? So in retail, we could speculate. Let's say the most profitable ones are senior citizens because they've got a lot of extra money. And at the far right are teenagers and youth, they don't have enough money. Or let's say on the left, the most profitable are women and the unprofitable are men, or another, or. Why not stop the hypothesis and let the computer do the calculation? And there is a technique called recursive partitioning and decision trees. And what it will do is it will go to the customer master file and look at all of the information about each customer, how far away they are, what is their income level, what's their wealth level, where do they live? You know, there could be 100 different data characteristics in the customer master file. And then it will calculate, look at the blue versus the red and say, okay, the ones that are more profitable have these characteristics. In this particular example is average order size and actually calculate it. And then it will go down the tree over and over and over again. So it's actually giving insights as to who is causing or responsible for the more or less profitable. Okay, next example, budgeting. This may surprise you. I think the annual budget process is so broken. It's so many jokes about it. You know, it takes months to prepare and then it's out of date a couple of months after it's published. It caves into the loudest voice and strongest muscle, you know, of sort of the managers who know how to pad the budget. Many people use spreadsheets, you know, for each cost center where the manager fills it out January to December. You know, my belief is the best thing to do is stop budgeting. But that begs the question, what was the purpose of a budget in the first place and can we replace it? And there is a way to replace the purpose. It's to view the amount of spending which is to the right, as a result of two river streams coming at an organization. The recurring repeatable work, which is demand-driven, typically customer demand-driven, and then the non-recurring work, which is typically project-driven, okay? And so here's the quick way for the repeatable work at the top. For the predictive view, what you really do is you use an activity-based costing, or you look at your past period costing and you get unit level consumption rates. We got to think like an engineer, not an accountant. And you multiply the forecast volume and mix times the unit level rates to get the level of capacity, number of employees and type, and spend with suppliers. I think it was second semester, freshman year at Cornell University, industrial engineering. Volume and mix times unit level rates equals capacity needed. For the non-recurring work, you go to the strategy map, you determine what are the cost of those projects. We want to connect strategy to the budget. It's typically disconnected. We go to risk management, look at what risk mitigation is needed, and then there's capital budget. I won't take much time, just 30 seconds. I've decomposed that diagram, but I just want you to look at the bottom right, see derived budget. From the top, we've got the operational budget from the capacity plan that we've monetized, whether it's euros or rubies or whatever, and from the left are the three operational. But here's now the question, and for forecasting, since we want to move to driver-based rolling financial forecasts, most forecasts, all forecasts will become inaccurate one day, 1 week, 1 month afterwards. So keep forecasting, and then you can recalculate that previous model. And you can go out 24 months, 36 months, and get a pro forma income statement and balance sheet. And you know what that leads to the next step, net cash flow, and that's really needed now with COVID. So many companies, board of directors want to know. Okay, but where does the analytics fit in? Most calculations and budgets are always a single point, but some of the more advanced companies will ask their employees and managers, give me a worst case or a best case, okay? So they can kind of get a view. But let's now imagine that we know of 6 or 7 main drivers that influence the budget. You know, currency rate, labor rates in different countries if we're international. And we have 7 managers who basically give us their estimates for those 7, but we also have them on a scale of 7. I'm using 7, 7, 7 for a reason. What we would basically come up with then is 49 combinations, 7 times 7, range of 7 on 7 variables. Boom, that would give us 49 different combinations, if all of them were the worst case to all of them were the best case on the right. So effectively, we're doing probabilistic rolling financial forecast, and you can do that with automated software like the many financial planning and analysis and ERP vendors that have got that. So, and finally, the fourth example is how well do we know that we selected the right activity drivers in our activity-based costing system? Because when you're selecting a driver, that's the between the activity cost and then the cost object, the product or service line, there really needs to be a high correlation. You know, because let's say the activity is making sales calls. Well, then the driver is going to be number of sales calls, okay? But if the quantity of the driver is going up and down, but the activity cost is not, or vice versa, it's bad. So here is an example of every data point you're seeing there is the activity driver. The vertical axis is the amount of the activity cost, okay? And then the horizontal axis is the correlation. So if I'm in the middle, that means I've got no correlation, not good. So we need to really re-examine whether that driver was the right driver. If we're too far to the right or the left, then we've got high correlation, and that's good. We've got good cause and effect relationships. So let's briefly now talk about the disruptive digital revolution. Wikipedia. A disruptive innovation is an innovation that helps create new market and value network and eventually disrupts an existing market and value network over a few years or decades, displacing earlier technology. The term is used in business and technology literature to describe innovations and ways that the market does not expect. Typically first by designing for a different set of consumers in a new market and later by lowering prices in the existing market. Here's the scary part about the digital revolution. The accounting profession needs to prepare itself for substantial change and a threat to jobs in accounting. This is because there is an accelerating and disruptive digital technology transformation in progress. It is referred to as the digital revolution. It can potentially adversely impact an organization's competitiveness, and it will replace some employee jobs with computers, and I'm naming accountants' jobs. There is a threat to one's job security. Examples of digitization disrupting traditional industries such as Uber for car passenger transportation, taxis, and Airbnb for temporary residence rentals, meaning hotels, they're just the tip of the iceberg. It is another categorization of digitization. Artificial intelligence, AI, including machine learning with algorithms, robotic process automation, and cognitive computing software that will create the dramatic change. Digital transformation is not exclusively about physical robots in a factory, but also about software robots that perform functions that white-collar employees perform. Digital transformation presents great potential, but also raises concerns. It can provide invaluable business enhancement, but it's also a threat to one's job security. So, a 2015 research study by the University of Oxford in the UK stated that accountants have a 95% chance of losing their jobs as machines take over accountants' number crunching and data analysis. And I'm talking about things like payroll, invoicing, purchase orders. A computer will sit side by side with a clerk and watch the keystrokes they're doing, memorizing it. And at some point, the computer's going to say, let me take over. I can do what you just did. So consider the adoption time length, duration of technologies that we are more familiar with, such as television in the 1950s, followed by handheld computers, mainframe computers, desktop computers, personal laptop computers, and now mobile phones. For each of those technologies that were introduced, the time length from the initial introduction of the product to its commonplace presence was fast. But what is more relevant is that time length rates for new technologies keep getting shorter. Artificial intelligence or robotic process automation is not 10 years away. It's not 5 years away. It's closer than you think, and very few of us are prepared. Career choices. As one begins to more fully understand the impact of software automation and the speed at which it will impact accounting jobs, accountants have two broad choices. And I'm talking to all of you. One is to be fearful, wonder if they chose the wrong profession and pursue a different career, get into a restaurant business or real estate. I'm joking. The other option is embrace this imminent impact from automation and prepare yourselves for the less tedious and more fulfilling work that will bring increasing value to the organization as well as to yourselves. And of course, that includes analytics. So in the interest of time, I'm not just going to briefly talk about 5 impacts that robotic process automation and artificial intelligence will have, but they're going to be lengthy because they're from the next few slides, and I don't want to read through all of them. But when you get these handouts, you'll be able to read them at your own leisure. But I'm just going to at least go to the slide without reading text, but kind of describe it. The first one is the effect on transactional accounting processes. I'm not going to read this, but this is the classic, what I mentioned, purchasing, purchase orders, invoicing, payroll. Again, the computer can basically monitor the person doing it and then take over. I'll read the last paragraph. Digitalization also reduces transaction labor as machine-to-machine integration expands. For example, when network communications between two parties conducting a purchase transaction is integrated, manual data entry is eliminated on both ends and errors. That's across the supply chain. Effect on period accounting closes. I'll read this. An organization's period and accounting tax will be impacted by digitalization. Many companies use outdated systems and cumbersome manual accounting. The risk of digitalization for accountants is due to the increasing application of affordable commercial software that automates the workflow of the monthly, quarterly, and fiscal year-end closes, including currency exchange rates and tax statement. The effect on auditing. This is certainly going to impact the audit firms. The audit is going to be replaced by a computer. It's already a commodity. This implies that the auditing firms must move to advisory services for their clients and not just the audit. And incidentally, I am partly retired, but I do like now training consulting firms and CPA firms how to implement these various methods using rapid prototyping and techniques so they can help their clients. And I'm just going to move past this auditing. Business process outsourcing. When I was with Varun, Jane, and Miles in my tours, I did go to Bangalore at midnight to Wipro and many of the others, and I saw those hundreds of desks of all the outsourcing. Well, you know what? Those desks may be replaced by a computer too, since automation can do it. I know it's scary. Regulatory filings to government agencies. One technique is extensible business reporting language, and it'll be frightening. Go to YouTube, search on humans need not apply. It's 15 minutes. It will be an eye-opener. So, benefits in summary from applying business analytics. First one is you're going to get a higher return on investment from leveraging your existing automation and adding automation. You're going to get deeper, more actionable insights, better understanding of what's going on. Reducing uncertainty and managing risk. You know, I mentioned about forecasts. There will always be, forecasts will have some error, but you can always do sensitivity analysis, increase the forecast by 5%, recalculate, see the impact on the income statement and balance sheet and net cash flow. Reduce it by 5%, see the same impact. Reduce it by 10%. What power can come from analytics? More intelligent and systematically tested decisions. Keep testing, keep testing. There's a credit card company here in the United States called Capital One. They do thousands of tests every year. They'll send out an email with blue print, with black print, with red print. They'll see the impact, maybe the color affects, which people then sign up to purchase the credit card. It's a bridge to a culture of optimization. So nearing the end here, what's really happening is there is a shift from the source of return on investment from tangible assets to intangible assets. What I mean by that is the return on investment for companies is shifting from buying things like trucks or machines or computers or software or hardware to an intangible asset like information. You can't touch or feel information, you can just view it. The problem is, and notice from this graph that the return on investment from information increases exponentially from left to right as you go from data to information to knowledge to insights to decisions. The problem is many companies, including in India, are stuck in the first two red bubbles to the left. All they have is raw data and standard reports. All they can answer with that information is what happened. In some cases, the chief information officer or IT director will give some managers and maybe some employee teams access to what are called business intelligence software, OLAP. I will give examples: Click, Tableau, Power BI from Microsoft, and even the ERP vendors have these tools. So you can drill down to a line item of an invoice or a purchase order to see a variance, but you're still restricted to only knowing what happened. The first blue bubble is the beginning of corporate performance and enterprise performance management, and I've authored many books on this. But we start with modeling. Once we have modeling, we not only know what happened, we know why did it happen. And you'll notice what I'm doing there in terms of accountants You know, accountants, some will say, oh, we've been doing analytics for many years. We do ratio analysis. You know, we do inventory turnover. We do percentage selling expense as a percentage of sales compared against our competitors. Those were in the accounting textbooks 10, 20, 30 years ago. What I'm talking about is above that. I gave you 4 examples and even more sophistication. The kinds that are used by supply chain people, marketing people. You know, marketing people, for example, they'll look at customers who bought, you know, they bought products A, B, and C. Then they'll look at similar customers in a similar segment that only bought A and B. Well, then they'll send them a marketing offer, coupon, or deal to those that just bought A and B with the discount for C, because they know that's called cluster and association. Then so now with that first blue bubble, we know what happened, why did it happen? When we get to the next bubble, now is the predictive modeling. The future's coming at us, forecasting. You know, all of the examples that I gave you. And then at the very top, well, at that point, we not only know what happened, why did it happen, what can happen, what are our options. That's where we could do what if scenarios and so like. At the very top is that Mount Everest of all the choices that we could make. What is the best choice? And that could involve things like linear programming. So another quote, last one from the professor in Denmark. The decision field for management accountants is an obvious candidate for business analytics, a fact that has been sporadically mentioned in a few management accounting articles, but a lot of white papers from consulting companies. Classical topics such as pricing, costing, planning, reporting, performance measurements are important decision areas where different topics and techniques from analytics can be used to improve decision-making and therefore to increase the external validity of our research. But we also have to focus on giving management accounting students and professionals the right skills in order to convince the companies that they should add value to the business. If not, other groups of professionals will take over, like statisticians or econometricians, data scientists, or other highly quantitatively educated people. So I'm going to end on integration of data science, and technology. The accounting professionals should fully embrace integration of data science, and technology. They should partner with the experts because it will have a transformational impact on future business and operating models. The limits or barriers on information flow are beginning to crumble. Those who prepare for this change will be at the forefront of accelerating value creation across an enterprise, and accountants are well positioned to drive this evolution as thought leaders. So, action steps: get educated. Thank you very much. By attending this webinar, you're getting educated. Get buy-in. You're going to have to basically overcome resistance to change from others. Rapid prototyping, start small, think big. Again, you're more than welcome to email me. You'll get that, and I can share with you some of my techniques of how you can actually build the first round of a model in a day or two, do iterative remodeling for 2 or 3 weeks, and have a permanent repeatable production system. Strategy map, balance, scorecard, ABC in 3 to 4 weeks, not 6 months to a year, because you can right size it. And there I have 3 links that would be helpful. And you may want to share, if you can download those links, with some of your colleagues and have them read it, if they will, meet them in a conference room and go around the room and say, what did you learn? What issues and concerns do you have? You really want to know their issues and concerns. They're usually misconceptions. So from theory to practice, your success depends on how well and how fast the right information gets to the right people. There is my email address and my website. And I think, Varun, I'm going to hand it over to you, correct?
Yes. Very nice. Thank you so much, Gary, for this wonderful, very insightful session. It's always a pleasure listening to you. I had this pleasure a few years back in India and now again today. So really, really lovely. And thank you so much for taking out time. So Gary, you'd be glad to know that, taking cues, listening to you, I think the IMA on the CMA exam has added a section on technology and analytics. which is being tested from this year onwards, from 2020 onwards. So we've already been, and again, of course, that's not hands-on on the tools, but it's again sort of context building in terms of trying to build up the analytics mindset, for CMA professionals, for students who go in for the CMA. Even on the CPA exam, which is public accounting, we have, technology and analytics being tested on the BEC. We have audit data analytics on the auditing part of the CPA exam. So I think, even the professional qualifications, are sort of understanding that, okay, hey, this is the way forward for finance guys. This is the way forward for accountants, and that's where. And what we've done, and this is sort of towards the end of last year, and we had the first cohort in Feb this year. We worked with IIM Lucknow. So IIM is the Ivy League in India. IIM Lucknow is ranked as number 4 among the management institutes in India. So that's like the HSW from an India perspective. And IIM Lucknow and Wiley, so we brought them together, and we created a very unique executive education program in analytics for finance and accounting professionals. So that's the first in the country, and I would say sort of a great initiative even from a global standpoint. And the agenda there is, a lot of candidates. We've done 2 cohorts for that. We had a cohort in the month of February, and then we had another cohort last month in June. And what we've done is, we've taken a lot of chartered accountants, sort of CPAs, or of CMAs, and of course, a lot of BCom grads with experience as well. And the first cohort has graduated, the second just started, and the third is going to come up in the month of October. The agenda is to upskill them. So Gary, I'll just take like quick 10 minutes, run through a few slides, and then we'll open up for Q&A if that's okay with you.
Do I need to stop my share?
I'll take over. I'll
Okay.
take over. One second. Here you go. Guys, just to talk a little bit about Miles, and again, as I said, taking cues from what Gary already said, our job is to help you be a future-ready finance and accounting professional. Our flagship programs are the CPA and the CMA program. So Gary was in India when he was IMA's Executive-in-Residence. And we of course traveled across many countries, many cities in the country, not many countries yet, but we spoke to many corporates, did a lot of road shows, we had a few roundtable events and a lot. All right. So, at Miles, we've taken our job very seriously of creating the ecosystem, for CPA, CMA in India. And again, the agenda is to help you be a future-ready finance and accounting professional. And as I said, earlier this year, Feb this year was the first launch of the IIM Lucknow and Wiley executive program in analytics for finance and accounting professionals. And again, a lot of stuff that Gary spoke to you about in terms of analytics, in terms of how technology can be used, for financial decision making, how technology can be used across the finance and accounting value chain. That's exactly what's covered on the program. So at Miles, we work with a lot of companies. We're tied up with over 120 of them. We're training partners with 56 multinational companies. So that's a lot about Miles. And then, of course, I'm going to talk a little bit about this program, which is a very, very unique program trying to upskill finance folks in analytics. Now, before I start talking, I have a few polls that I want to quickly, roll out, and see, where do you stand as far as analytics is concerned. So here's your first poll in terms of, are you aware of the relevance of data analytics in business and in finance? Where do you stand? Okay, I'm going to close the poll. I hope everybody's able to see the poll. Sometimes in Zoom we hear that if you're logged in with the browser, you can't see the poll if you're in full screen, and you sort of exit the full screen to see the poll. I hope all of you are able to use it. Okay, I'm going to end it now. Okay, and share results. Okay. Great. So Gary, this is interesting statistics, right? You see 11%, of the audience, they're already using data analytics tools, but 67%, that's a vast majority. They're aware of data analytics, of course, big data, right? It's a big word, but then they're not really upskilled there and looking forward to learn. And of course, then there's a few of them, over 23%, who've heard it for the first time. Great, guys. So you've heard Gary, you've heard the global expert on this, and I'm going to sort of add on to where how data analytics is relevant to any business function, right? I mean, so whether you are you want to be a successful marketing person today, you need to use technology and analytics. You want to be a successful HR guy, again, technology and analytics. You want to be a successful supply chain person, again, technology and analytics, right? So same thing. You want to be a successful finance guy, there is technology and analytics. Now, typically when we look at finance guys, right, we finance folks are very, very comfortable, using Excel, right? So, if you ask us our comfort zone, it's Microsoft Excel. And if you talk about analytics, we know pivot tables, right? So when we can sort of work with the rows and the columns to try to analyze the data. But if you realize, right, so when we look at Excel and pivot table, it helps us analyze what happened. It helps us do descriptive analytics. But, Excel's not powerful enough to help us show trends or do predictive analytics. Or if you have a few million records, Excel will crash. Or if you want to use data that's unstructured data, let's say if you're looking at how do you grow a product line, of course you're looking at numbers, you're looking at financials, and that's an important piece. But how about, let's say, going to social media and looking at how your customers are responding to your product? What are their comments, right? How are your customers commenting on Twitter, on Instagram, on Facebook? And you take all of that data, unstructured data. Or let's say you walk into your customer service help desk and look at the escalation emails that they've been receiving. And you use all that unstructured data and factor that to take a decision in terms of how do you scale up the product, or what do you fix, to take a decision, should you even continue with that product line? So all of that is data analytics, and very, very important for business decisions, for financial decisions. So guys, this is a program that's been created. Again, the question here is, are you ready? Gary's spoken a lot about relevance of data analytics, and that's exactly what this program understands. A very unique facet of this program is this is for finance and accounting people, right? With IIM Lucknow, we have a series of programs. We have already 4 programs which are active. The other 3 are in business and data analytics, for product managers, so data-driven product management, that one's for talent analytics and HR management. So again, this program is focused, this is analytics focused on finance guys, right? So if you typically want to do an analytics program, you often end up in a cohort, in a batch, where you're sitting in with a bunch of engineers, and sometimes you're not able to catch up, as far as technology is concerned. But this program is for finance guys. The entire peer group is finance professionals, chartered accountants, CPAs, CMAs, people working in finance or aspiring to work in finance. And that is where this becomes unique. The piece of the program is for the finance folks. The data sets, the case studies are all finance. Right, and Gary's already spoken about that, descriptive analytics to predictive to prescriptive, right? So it's not just about what happened, right? You want to talk about what will happen, how will you make it happen, and that's your job today as a finance professional. So again, this is about technology, data, domain knowledge, all of that coming in together. This program, this sort of runs in over 6 months. You have live online classes every week. And there is, it was already 3, now it's 4 days of immersion at, the IIM Lucknow campus. Of course, now with COVID, you're not traveling to campus, but what we've heard from IIM Lucknow is, post-pandemic, they would organize a meet where they'll call everyone and they'll do extra sessions. But for now, the program is live online classes, 4 hours of sessions every week, and of course, a lot of practice. And you also have Wiley, involved in this program. There are master classes by industry experts from the Wiley Innovation Advisory Council. So that's the who's who of analytics and AI in the country. Yep. So this is interesting. The program curriculum. Look at the modules, right? The modules are all analytics, statistics, analytics in F&A, analytics in financial services. So if you're working in banking, insurance, using R for analytics. So that's one of the tools. Advanced analytics, data visualizations. That's putting the data in high impact dashboards. But if you look at the case studies, right, it's all finance, reporting of data, forecasting techniques, optimization techniques, predictive techniques, anomaly detection and invoicing. So that's like audit data analytics, right? Financial forecasting, risk assessment, product costing analysis, budgeting and hypothesis building, payments and lendings, insurance analytics, fraud management. So all of that, in this power packed program. Okay, so I'll quickly move on. So application of analytics in F&A, various data analytics and visualization tools, that you see here, and this is, so of course, there's a little bit of Excel, but the focus is on R for analytics and Tableau for data visualization. Because this is a lovely campus. It's a co-created, the program, the content is powered by Wiley, which is a global leader in learning solutions, 200-plus-year-old company. One interesting fact is over 470 Nobel laureates have published for Wiley. So you sort of understand the length and breadth of Wiley. This is the Innovation Council that Wiley has created. This comprises few academia members from IITs and IIMs and a lot of industry leaders, CXOs in analytics and AI in the country. So, and few of them would be taking master classes for you on your session. This was the first batch back in February when things were good, and this was the cohort on the campus. The cost of the program is about 140,000 plus GST, and then you pay another 10,000 bucks for the IIM Lucknow MDP alumni membership fee. So this program not just gives you a certificate, you also get an alumni status from IIM Lucknow. So again, a power-packed program, and for any further information, you can get in touch with Akanksha Singh from Miles, who takes care of all the enrollments, for this program. So let me quickly, roll out a couple of more polls for you. Okay, so this is the question. Okay, here you go. So guys, the next cohort for the IIM Lucknow Wiley program is starting October 3rd. So, that's like, a couple of months from now. And, of course, there's an eligibility test, and you got to clear the eligibility test before, you're admitted onto the program. The eligibility test is happening on the, 8th of August. And those who are interested will get in touch with you and get you on there. Okay, great. So guys, thank you so much everyone for being part of the session. We'll open up, for Q&As. Let me stop the sharing. Okay, so, if you have any questions, you want to ask Gary, or talk to me, raise your hand, not physically, but you could use the raise the hand button. I'll call out your name, and then you can sort of speak up, ask your question, and then we take it up from there. Okay, so let's see, Aman Anand, hi Aman.
Hi Varun, hi Gary. Actually, I just wanted to understand that since this program is getting you future ready, so how in terms of number of years, how many years is India behind the US in terms of this concept, and what are the exact jobs at the moment in India which one can seek after doing this course, and what support we are getting on this?
So Aman, the agenda, of course, this course is about data analytics, and you could do any other programs, but the point is, right, if you want to look at jobs in finance, and Gary has been speaking about that as well, that it is a lot of job roles in finance and accounting are still transactional. A lot of transactional jobs, they have been automated, or those that have not been will be automated, right? I mean, you see people in accounts payable sort of manually entering, getting an email, doing a three-way match, logging into SAP and trying to enter the invoice. Now, that can be automated. I mean, so Gary also spoke about robotic process automation. Why do you need a human being for the job? You can have a bot do that for you. So let's understand, what will be the finance jobs of the future. The skills expected from finance people in the future, right? So that is where we say we would need finance folks with critical thinking skills, with analytical skills. We need finance folks who can help navigate the organization forward. Help us do, let's say, predictive analytics, what's coming next, and create value for the organization. And I think, and before I give it to Gary, India, typically you had a huge surge of KPOs, right? Where you had finance and accounting work from around the world come into India. And one of the biggest priorities for companies was to get the work to India because, you had a huge arbitrage with labor cost. And let's say I could talk about, CPA or CMA jobs, right? I mean, a fresher CPA or a CMA would be paid about $60,000 to $70,000 in the US, whereas in India, you'd get the same individual qualified person for about $10,000. So the agenda was to bring the jobs to India because it was cheaper labor. But now, even when you look at the Accentures and the Genpacts and all of them, now it's not about hiring tens of thousands of people. Now it's about how can we automate these processes? How can we offer value-added services to our clients? Because, the accounts payable, if you've heard of P2P, procure to pay, O2C, order to cash, R2R, record to report, a lot of these jobs where there were thousands, it's sort of getting condensed to a few hundreds, and I don't know, it'll get condensed further. But more importantly, the Accentures, Genpacts, the Big Four, all of them are looking at, okay, hey, can we provide more value-added services like, let's say, FP&A, financial planning and analysis? Can we do, data analytics for our clients, help navigate the clients forward? So from an India perspective, I think, over the last couple of decades, the focus was to bring the jobs here and reduce, sort of consolidate positions. But now, even in India, we see a huge automation trend. We see companies adopting to AI, RPA, using data analytics and all of that. And Gary, your comments on this?
Yeah. I look at it. There's two pools. There's data science people, because Aman, your question was how many years ahead or behind. I think in the data science area, it's pretty much even. There's a tremendous intelligence. I am aware of the Indian community, and actually where I live, you'd be surprised, in Cary, North Carolina, huge Indian population. That's part of the United States. In the accountants, I think the more interesting question is how many years behind are accountants from data scientists and marketing, and it's probably 5 to 10 years. And I don't think it's about the US accountants being behind or ahead of the Indian accountants. They're probably in the same place. They're both way behind marketing and sales. That's the issue. But I'll warn you on something, and maybe this is indirectly related. One of my concerns about India is way too much emphasis on external financial reporting and statutory, and not enough on internal management accounting. So I believe that even if an accountant is well-meaning and really wants to expand their career in their company, they may be so, if you will, preoccupied with the task of having to close the books for the financial reporting for the government and so forth. They're not going to basically have enough time to do the more internal management accounting, which then needs the analytics to go into. So that's just sort of an essay or a political statement. India has got to shift the imbalance from too much emphasis on external reporting and much more on management accounting. External reporting is valuation, inventory valuation, cost of goods sold. Management accounting is creating value through better decisions. Okay, Varun, next question.
Sure. Cheers, Aman.
Cheers.
Okay, Atul Gupta. Hi, Atul.
Hi, can you hear me?
Yes, very well, Atul.
Oh yeah, thank you. So it was a good informative session. So I just want to understand, when in this course, do we take AI ML also?
So Atul, not really. So if you talk about the IM Lucknow program, of course, you're introduced to all the emerging technologies, AI, ML, RPA, all of that, blockchain. but there's no deep dive into AI and ML. Of course, there are other programs for AI and ML. Let's say, we've recently launched a program with IIT Roorkee and Wiley, which is AI for banking and finance, right? So there's AI and ML there, which is very hardcore technical. This program is of course, it's got technology, it's got data, but it sort of starts in from for a finance professional who doesn't know much about technology, and sort of gets him up to a level where he's able to use data and analytics. But if you go to mileseducation.com, you'll have an AI program as well, AI for banking and finance from IIT Roorkee.
Okay. Fine. So in this case, the person has to be like a chartered accountant or BCom, or what should be his or her background?
In case of analytics for finance and accounting, it can be a BCom grad, it can be a qualified person. There's of course an eligibility test, which does not test you on your analytics knowledge, but basically on your data interpretation skills. Your resume and everything is sent to your SOP, is sent to IIM Lucknow, and they're pretty selective. But if you have a good profile, high chance of getting selected if you pass the eligibility test.
Okay. So what about Python? Do we take Python also in this class?
On this
Python
program,
is also emerging.
there's a choice of tools, there's SAS, there's R, there's Python. So there are multiple tools, and it's not only about the tools. I mean, you need a tool to do data analytics, of course, but it's not just about the tool. It's about the mindset, for data analytics. It's about, let's say, you as a finance guy, you want to use data analytics. So you sort of have the mindset of what kind of data sets to use, how do you mine the data, how do you present the data. So there's a lot about sort of the mindset for data analytics, how to use data analytics for business decision making, for financial decision making. So the tool is there, and tools will evolve, right? You see Python, you see R, maybe 10 years later none of these may exist. There may be new tools will change. So there's not, I mean, of course you learn one tool here, but both R and Python are widely used, Atul. So for finance guys, we use the R language. There's another business and data analytics program where we use Python, and again, it doesn't matter which tool, it's about getting started here.
Okay, thank you.
Yes, Atul. Okay, let's see. We have Rahul Kumar. Hi, Rahul.
Hello. So
Hi.
my question, like, I don't have any technical knowledge. I'm a core BCom plus MBA finance, and currently I am working with PwC, and the prior knowledge is in Deloitte, and it's in tax profession. So is there any expectation like I would have some technical knowledge, and then only this course can be helpful? Or if suppose I don't have any experience in technical part, is there any chance to get stuck while doing this course or something? So I need your help on this.
So Rahul, very interestingly, right, this is a program for finance and accounting folks. Now, the challenge that you have, and we did a poll, right? So we saw only 11% are using data analytics tools. So that's the case with vast majority of finance and accounting folks. We could with Excel, but beyond that, nothing much. So that is the expectation on the program, where most of the cohort hasn't really used data analytics tools, doesn't know programming, and it starts from scratch. So and the good thing is it's sort of a function-focused analytics program, right? It's a finance and accounting focused analytics program. So that's what makes it very, very unique. And you don't have any such program in the country, at least. I've not heard of any program. Forget the Ivy League, even the normal league. We've never come across such a program.
Oh, thanks, Varun.
Cheers, Rahul. Okay, Arun Karthik. Hi, Arun. Arun, you're muted at your end.
Yeah. Can you hear?
Yes, very well, Arun. Hi.
Okay. Hi. Hi, Varun and Gary. It was a very good session, and very informative. That is the need of an hour that we were discussing, and it is going to be helpful for everybody because most of them, I believe, joined here in the webinar. Most of them are finance and accounts background guy, and they typically need this data analytics knowledge, and they should also explore more options on the technical front. Yes, it is the need. Thanks for the detailed sessions. My question or kind of a clarification would be like, so currently I'm a BCom MBA Finance, and I have also completed CISI. That is a first module I have completed. I got a certificate from London for the first module, and I just wanted to understand. I'm working with State Street HCL Services. State Street, it is in Coimbatore. So within this organization, I've been equipped with. I'm currently an associate manager. Okay, so from this level, within an organization, after completing this, the IIM Lucknow program, so would I be able to switch my career into a strategic planning or a kind of a data analytics or business analytics vertical? I mean, within the department, I'm currently with fund accounting. So after completing this course, can I move internally within the company to a strategic department or a kind of business analytics department, or kind of I'm looking inside the company basically? Can this course help, or even the outside company as well?
So Arun, I know a lot of folks, especially who upskill themselves in analytics and from this program as well, sort of have a good career path in FP&A, financial planning and analytics, where your job is to look at, okay, next year, how do you navigate the organization forward? And I think that's a good space, Gary. If you want to talk about spaces, or functions for finance people, who are skilled in business and data analytics. I mean, where do you see, what roles do you see for finance guys globally?
Are you asking me?
Yeah, Gary.
Well, first of all, you were the best one to answer his question because it's about the course. But, the first thing as I was listening to you, Arun, I just said, follow your heart. Follow your heart. You got to go, you'll get there. Aim high. It's much more fun to solve problems. I use the term go from a bean counter to a bean grower. And it's much more fun. So FP&A is such a broad topic, and enterprise and corporate performance management, those are methods, and they're synonymous: EPM, CPM, FP&A. They're all kind of the same thing, but they're all basically about performance improvement. So my short answer is just go where you wanted to go. But you got to get educated, and the Miles education, I was pretty impressed. It was the first time I've actually seen the layout, and I'm very involved with Wiley. Also, I mentioned Varun, almost all my books, if you go to wiley.com and do a search of my name. So just follow your heart. That's my answer.
Okay. Cheers, Arun. I hope you got some insight, FP&A, performance management. And Arun, as a matter of fact, right, a lot of roles that you see in finance, and whether I talk about State Street HCL or we talk about any other company, my question to you is your job, or people who report to you, is their job transactional? Is their job about data entry? And if it is, be rest assured that job will not exist a few years from now. So I think that could be a good thumb rule, and that is where you need to build on analytical skills, critical thinking skills, to be ready for the future world of finance. So I hope, Arun, this perhaps answers your question.
Yeah, thanks for
Yes,
thanks Varun and Gary. Yeah.
Okay, Jitendra. Hi, Jitendra.
Hi Varun. Hi Gary. So my question is on the best fitment for this particular course. So this course is particularly good for how many year experience professional. Like I'm a manager. So is this course actually for the beginners, or probably 3-4 years experience guys who are an executive level, or this course will also help the managerial level guys?
Jitendra, my answer, everyone. Whether you're a student, you're a professional with 3 years of experience, or you're a professional with 30 years of experience. if you want to sort of, get ready for the future, rather, it's not the future anymore. And, Gary, you can vouch for it. It's the present, right? I mean, today we are, surrounded, data is all over the place. Do we want to take decisions based on gut? Do we want to take decisions based on limited data? Or we want to sort of do advanced analytics to drive our organization forward? So Jitendra, anybody, and this course, of course, is for finance and accounting people. But, even if you're a non-finance guy, even if you're, let's say, a marketing guy, you're an HR guy, you're the CEO of the company, again, it's all about, we say, right, data is the new gold. Data is the new oil. And if you want to take business decisions, if you're involved in any business function, it is, business analytics and data analytics for you. So, specifically on this program, the requirement is at least a year of WorkX, but then of course we, then there are qualified folks with lesser WorkX, and then there are other folks who have 10 years. So last cohort, we had folks with 20 years, 30 years of experience on the program. So it was a diverse audience. And, I would say, upskilling in analytics, upskilling in technology is relevant for everyone, and especially for finance guys, right? Our work, we feel we are pretty away from the world of technology. And even if you look at the finance function over the last couple of decades, even the reporting bit, right, the transactional bit, 30 years back, you would have those manual vouchers and those, balance, the ledgers and all of that. Today, it's all about, it's all automated, right? You have the ERP systems. Even if you're a smaller company, you would use QuickBooks or Tally in India. You've had technology coming in finance and accounting. And now all that reporting bit, right? What happened last year, to a great extent, it's automated, and the portions which are not will be automated. The job of the finance guy will be to talk about what will happen next year, what will happen few years from now. How do you create value for the organization? And that is where analytics and everyone who's working in finance and accounting and wants to work, let's say, if you still want to be a finance guy in the year 2030, you better upskill yourself in analytics right now.
Yeah.
I don't know, Gary, what's your take? And you work a lot on the trends in accounting. So how do you see this in the US and worldwide?
Well, I reinforce what you just said. In the absence of facts, anybody's opinion is a good one. I'm going to repeat that. In the absence of facts, anybody's opinion is a good one. But usually the biggest opinion wins, which is the opinion of your boss or the boss of the boss. So to the degree that they're making decisions on gut feel or intuition or flawed and misleading information or office politics, an organization's at risk. And so what the accounting profession, the accountant, the FP&A can contribute is provide that fact-based information. Now, of course, when we go to the predictive view, it's not necessarily fact-based, but to this, or techniques, I should say, we can reduce the uncertainty because you're forecasting accuracy. And the tools are separate. I have a joke. It's called "A fool with a tool is still a fool." It's not the tool, it's the method. And the tools, basically, the technology supports the method. So all of these various software tools pretty much can do pretty much the same thing. So everybody's on the right track. But I'll tell you, we haven't, and incidentally, I'm not looking at the questions. I'm reluctant that have been posted in the Zoom. So the Miles people, if there's some for me, they can email it to me and give answers you can get later this week. So I'm not ignoring them. I just don't want to touch them. But a topic that should come up is how do you get buy-in from your line managers and executives? And that's a whole other issue because the adoption rate is very slow. And that's going to be so key. How do you expedite and increase the speed of buy-in and adoption? And it really is going to require change management skills. And very few of us have those types of skills to overcome resistance to change and make people more comfortable about their fear of knowing the truth or others knowing the truth, or their fear of being measured, or their fear of being held accountable. That's got nothing to do with technology. It's got nothing to do with methods. It's all people. And, you know, how many of you have degrees in psychology or sociology? None of you, you know, me neither, you know. We're all Newtonians, you know, like Isaac Newton, the physicist. To us, the world's a big machine. We want the levers, the pulleys, the dials. We've got to be a bit of Darwinian, like Charles Darwin, sense and respond. So I know that question wasn't asked, but I just wanted to bring it up that you're going to have to figure out change management techniques to get people's buy-in.
Yeah, very rightly said.
Cheers, Jitendra. Hope, you know, soft spoken a lot of things. Hope you got your answer.
Yeah, right. Thanks very much.
Cheers. Okay. So Shyam Sundaram. Hi, Shyam. We'll take a few more questions. We're like 10 minutes more, Gary. So we'll just take a few more questions before we wrap the session. So hi, Shyam.
Hi, Varun and Gary. So I'm a senior professional working in investment banking. So I got two questions. My first question is, what is Wiley's role in this program? Because prior to attending this session, I thought it was a business analytics plus a big data course, and big data is where Wiley is mostly known. So just wanted to understand, like, what role would Wiley play in this?
So this is Shyam, right?
Yes.
Yeah, okay. So Shyam, you know, if you go on mileseducation.com, you would see a bunch of programs. There's also a program on business and data analytics, which is more generic, which is cross-functional finance, marketing, HR, supply chain, various sectors, healthcare, and all that. So this program is analytics for finance and accounting. So you've all of that. Now, where does Wiley come in? So let's understand, right? So IIM Lucknow is a top academic institution. It's one of the best in management education in the country. Now, what they've done is they've collaborated with Wiley. Now, why did they need Wiley? They needed Wiley, number one, for quality content, right? So in terms of analytics, Wiley's got, you know, is a leading in the world, and even Gary is a Wiley author. So you know, you can. So Wiley's got the best quality content, and you know, besides Gary, you have 470 plus Nobel laureates who are Wiley authors. So it's the best quality of content globally. Number one. Number two, Wiley has created the Innovation Advisory Council. And if you go through this council, that's the who's who of analytics and AI in the country. So basically with Wiley, an entire industry board is getting involved in creating the curriculum and executing the program. So that is Wiley's role on the program. And that's the reason why IIM Lucknow associated with Wiley, because that's the value that they brought on the table. So now what happens is you have this program delivered by IIM Lucknow professors, and you also have industry experts by Wiley. So that sort of makes it very, very high impact.
Okay. All right. Varun, my second question is, I find this program to be a bit on the expensive side. Now, I'm already a professional working in the capital market space, and we deal with RPAs and Alteryx and other analytical tools. I just wanted to understand, so as a part of this program, would the professors there cover Indian examples, or would they cover HBS case studies and live projects and all?
So see, Shyam, so first thing in terms of the cost of the program, right? So this is a program which is, the training hours is about close to about 140 plus hours. Of course, on top of that, you have your own practice. And this is a program from an Ivy League in the country. So you would have, whatever the price. But frankly, I don't agree with your point that the price is more. But if you just want to learn the tools, you can just do it online. You can learn it even free on edX or Coursera or somewhere else. So this program is not just about teaching you a tool like R or a tool like Tableau. This program is about how you use analytics in business, how you use analytics in finance, and that is where the expertise of IIM Lucknow and the professors come in. So case studies, data sets, all of them are very, very relevant to the industry. And of course, this is a program for the Indian audience. I mean, we have a few people who've come in from the Middle East and Southeast, but all of them also have been from Indian origin. So this is an Indian program. So it's going to have Indian stuff, it's going to have global stuff, it's going to have all that's relevant. Even the industry experts who come in terms of delivering the master classes here are from the industry. They're working in India. They're working for multinational companies. They're working for Indian companies. And I think you have a whole mix of all that you need, in finance and accounting. So, I'm like, the feedback that we have from the previous cohorts, they really found a lot of value on this program. So, and I think, it's a power pack program with multiple ingredients put together, Sham. It's not like a single focused, it's not an R training program. That's what you're looking at.
Okay. All right. Thanks, Varun.
Yeah, Sham. Okay. Let me see. Jaya Prabhu. Hi, Jaya.
Hello. Hi, sir.
Hi,
Can you hear me?
Hi, very well.
Sir, I'm 19 and I'm studying in University of Madras third year, BCom General Correspondence.
Sure.
And as well as I'm studying US CMA also. And I'm even ethical hacker.
Wow.
Is that a helpful for my career, ethical hacker?
Wow. So, Gary, you have here a prospective CMA who's also an ethical hacker. How do you see him?
I didn't understand that question. Can you repeat it for me, Varun?
He's a prospective CMA. He's pursuing a CMA, and he's also an ethical hacker. Cybersecurity, right? Ethical hacking. So what do you feel?
Wow, those are two diverse fields, but I just think there's going to be so much interrelationships as we continue on, interdependencies, integration. I'm not sure whether he's asking which one to pursue, but I would say go down both paths because they're all going to merge. Life is continuous learning. Life is continuous learning.
So Jay, if you heard Steve Jobs, right, at the end of it, all the dots will get connected.
Okay, one more dot I have it. Can I ask it?
Yeah, sure.
Sir, after completing USCMA, I have planned to do CPA also. If I do CPA or data analytics, can you say?
So Jay,
can I do CPA?
If you want to get into audit or you want to get into tax, CPA would be a great career choice. But I see you're very interested in technology, and that's where ethical hacking would have come in in your kitty. So I would say instead of CPA, build it up with data analytics. That's my opinion, Jaya.
Okay, thank you, sir. I will contact with you in Instagram. Thank you a lot. Thank you, Gary, sir.
Okay, so a couple of more questions. We have 6 more minutes. Okay, Alok Shukla. Hi, Alok.
Hi, Gary. Hi, Varun. I've got a very quick question. Actually, I'm into R2R domain for the last 8 to 10 years. So, and I'm an MBA graduate and currently pursuing CMA US. So, just advise me. So, should I start doing this business analytics ahead of the CMA US, or I should first complete the CMA US and then in next after 1 year I should pursue the analytics, or I should start doing both simultaneously?
So Alok, let's understand, right? The CMA and the analytics program, they complement each other. CMA is about functional skills, finance skills, and sort of make sure that you have all the pieces, all the competencies necessary to be a finance professional. The IIM Lucknow program will complement, where it'll tell you, okay, hey, this is technology and this is data and how you use it in FNA. So I would say both are good. The order, you decide, it's a call that you'll have to take. You want to say, okay, I'll go slow on CMA now and I'll complete this first, then I'll come back on my CMA. That is fine. Or you say I'll complete CMA first, then I'll get started. Even that's fine. So I think it's a call that you'll have to take a look, in terms of what's the order. But what I can tell you is, yeah, both of these complement very well.
Okay. Thank you so much,
Yes.
Varun.
Yes, Alok.
Yep.
Okay, Harita. Hi, Harita. Harita, you muted at your end.
Yeah, hello.
Hi, Harita.
Hi, I'm Harita. I'm pursuing US CMA right now.
Sure.
And I'm really interested in marketing. So I don't know like what to take after this.
You're interested in marketing. So you want to sort of change your function to marketing, is it, Harita?
Yeah.
In which city do you work? Are you based out of?
No, I'm not working. I'm still a student.
Okay, in which city?
Bangalore.
Bangalore. If you're so keen on marketing, why CMA? I mean, if I would ask you.
I just it's like now I'm doing my first year in BCom, so I just took CMA, and I heard that even with CMA you can go into marketing.
So if you get into marketing of financial products, financial services, yeah, CMA would be helpful. So Harita, I think it's a little too early. You just started, and if you're sort of on CMA, complete your CMA, and then I think in the next couple of years you'll be in a good position to decide which area you want to navigate to.
Okay.
And you can get in touch with the Miles team. We do have a few marketing internships. Gary.
Varun, I can add to that. I think it's a good path. Marketing needs help from finance and accounting. A lot of marketing decisions are based on their own intuition or their sense, and they've got some pretty good information, but in the end, money is the language of business. And so such things like customer lifetime value in the retail space, business to consumer, like I said earlier in my talk, marketing needs to figure out what types of customers are more attractive to retain, to grow, to win back, to acquire. How much should we optimally spend with coupons, price discounts, deals, and all that stuff? It's really trying to kind of get the return on customer. They don't have accounting skills. They've got marketing skills. So you can pick up the marketing skills later, but by having a CMA, the contribution that you would bring to the table would be huge compared to what they've got. So you're on the right course. You're young, so, because I think marketing is the tip of the spear, in my experience, for growing businesses. The really good marketing departments are the ones that come up with new product development, new services, and so forth. But, there's got to be, it's got a capital investment. You got to evaluate how, is it worth it, and how much are we going to get the return? And you're going to get competing opportunities. So having a financial CMA experience, you'd be a really good contributor to a marketing team.
Okay, thank you. Thank you so much.
Here's Harita. Okay, we have Abayomi Taiwo, and you're a PhD. So hi, Abayomi, hi.
Yeah, I'm into physical sciences. So I'm trying to look at the best area I can venture into, whether into data analytics or artificial intelligence. Can you advise me more better?
Gary, you want to take this?
Yeah, physical sciences, I don't know. And I know we only have 1 minute here, and it's a professional courtesy to end on time, but sounds like physical sciences, that would be more data analytics. And I don't know if you're really talking about geology or astronomy or medical, but that's the power of just being analytical. Artificial intelligence, that's future. I think, Varun, we need to wind down. To me, it's just a courtesy to not take people over their time. And it's late. They got to go to dinner, or they already had their dinner, go to sleep in India.
We'll just take one last question. I just see Avita's raised it, and then with that we end it. So, hi, Avita.
Hello, hello, Varun.
Hi.
Hello, Gary. This is Evita. I have this confusion in terms of understanding about this course.
Sure.
Like I have 6 years of experience. I have experience into FP&A.
Very nice.
And I am as assistant manager. So I'm looking forward to understand how it will be useful for me in terms of demanding and my future upgrading.
So, Avita, just to keep it very simple and to keep it short, because we are running a little over time. So as part of your role in FP&A, right, your job is to talk about what's going to happen next year, correct?
Yes.
Yeah. So when you're talking about what's going to happen next year, what you're basically doing is predictive analytics, and whatever tools you currently are using. So I think, let's say a course like CMA, again, sort of empowers you with finance functional skills, again, very, very tailored towards FP&A. A program in analytics, again, helps you to sort of look ahead, to sort of look at a lot more diverse data points than you already are. Often when you do budgeting exercises of financial planning exercises, you look at a certain set of data sets which are basically financial. So here you'll also talk about a lot of non-financial data sets that you want to use to help navigate forward. So Avita, I mean, I think, if you're looking at FP&A, I think, a program like CMA, which is management accounting, an analytics program like the IIM Lucknow Wiley program, I think these are very, very helpful. So what you could do is get in touch with the team, Akanksha or somebody from the team will get in touch with you and you could understand more. But I would say, these programs are very, very relevant, especially in your function, depending on what you're looking at from your career standpoint.
Thank you, Vishal. Thank you, Gary. Have a good day.
Okay, so thank you so much. We have a few more hands raised. So guys, I think we'll call up the session now. If you have any doubts, you had Gary's email ID. You can also drop me a line at varun.jain@mileseducation.com, varun.jain@mileseducation.com. And you also had Gary's email ID, and Gary's very kind. He replies back. So thank you so much, Gary, once again for joining on the session. Very, very insightful, and it was lovely hearing you again after a few years. And I'm really, really thankful and looking forward to more such sessions with you, Gary. Thank you so much.
My friend, your energy came to me, my energy came to you. So thank you very much.
Cheers, Gary. Good night. Good day. Have a good day, and good night, everyone from India. Good night. Bye.
Thank you, everyone.
Thanks, everyone.